Okay, so you can see our balance for Bob Capital is $33,246. Okay, what I've done, if you look in the practice solution for chapter 4, what I have done is I've provided all the journal entries involved, and I've also provided a trial balance. You will see that now in our trial balance, of course, our revenue and expense accounts no longer appear because they each and every one has a zero balance, and of course our drawings accounts don't appear. And you will see the change to Bob Capital where we're taking into account all of our net income and our drawings, so that'll all be taken into account. So go through that carefully and it should all make sense to you. I also want to mention there's 9 steps in the accounting cycle, and I did list all 9 steps out for you in your study guide, so make sure to go over that. Okay, classified balance sheet. All the classified balance sheet is doing is grouping together similar assets and liabilities. So we have current assets. Those are assets that are going to be used within the next year or the next accounting cycle. Long-term investments, those are items, of course, that are going to last more than a year. Those could be various investments. Maybe we've invested in another company. Property, plant, and equipment is various pieces of equipment or property that we might have that is going to last us for longer than 1 year or the operating cycle. Intangible assets are things you can't touch. So things like patents, goodwill, I don't know if you've heard that term before. That's where maybe there's been a business in operation for several years and you're willing to pay more than what its assets are valued at or what its assets are in the book for. Either way, you're willing to pay more than that because they've got a good business going. That's goodwill. Liabilities and owner's equity. Again, current liabilities. We're going to pay those within the next year or the next accounting cycle. Long-term liabilities are going to last us for over a year. That portion of our long-term liabilities that we are paying in the upcoming year or accounting cycle, that small portion will be classified as a current liability. And we have owner's equity in the case, of course, of a proprietorship. We're going to have, for our owner's equity, we're going to have owner's capital. If it's a proprietorship, it's going to, of course, be 1 capital account. If it were a partnership with 2 people, it would be 2 capital accounts. If by chance it's a corporation, you would see, instead of the owner's equity section, you would see common stock and you would see retained earnings, but we're not going to be dealing with that. So hopefully that makes it a little bit clearer about what the classified balance sheet consists of. Okay, I just wanted to give you a brief example of a correcting entry. I did give you one within the study guide, so I'm just going to give you one more. Let's say we recorded this as equipment for $1,000 and cash was $1,000. And we discovered, wait a minute, this was a mistake. We didn't pay cash for it. It should have been recorded as an accounts payable. What we need to do as soon as we find out, we don't wait, as soon as we find out, we do a correcting entry. And what you can do, like on the side by yourself, before you actually touch your books, you can go ahead and look at what you needed to do. So let's say if you just reverse this, it would have been cash, 1,000, right? Equipment, 1,000, and the entry would be gone, right? And then you'd have to go ahead and re-record it as equipment, 1,000, and accounts payable, 1,000, right? Well, you can look at this and say, you know what? I don't need to go ahead and make these 2 entries. I can just make 1. All I really need to do, my equipment ends up canceling out, right? My equipment is fine. It's going to end up as a debit either way. I don't need to do anything with that. All I need to do is to get rid of my credit and cash and acknowledge I should have credited accounts payable. So all we would have to do to correct that entry, we would go ahead and debit cash, right? And that would take care of our mistake with cash. And then we could go ahead and credit accounts payable. And now the entry is correct. We've gone ahead and taken care of it. So that's basically how correcting entries work.